On April 2, 2025, President Donald Trump declared what he's calling Liberation Day, unveiling a massive tariff plan that's sending shockwaves across the globe. Picture this: a universal 10% tariff slapped on all imports to the U.S. effective April 5th. But wait, there's more. Specific countries are getting hit with even higher rates. China, a whopping 54%; European Union, 20%; Japan, 24%; South Korea, 25%; India, 26%; Vietnam, 46%; Taiwan, 32%; Thailand, 36%. Now you might be wondering, why such steep tariffs? The Trump administration argues that these measures are necessary to combat unfair trade practices, address trade deficits, and protect American industries. They claim that countries like China have been engaging in currency manipulation and imposing burdensome regulations that disadvantage U.S. products. But here's the kicker: these tariffs are poised to have a cascading effect on the global economy. Stocks are plummeting. Investors are seeking safe haven assets like gold, and the economic uncertainty is palpable. In the U.S., consumers are bracing for impending price hikes on everyday goods. From electronics to clothing, the cost of living is about to get a whole lot steeper. And it's not just consumers feeling the heat. Businesses relying on imported materials are facing increased production costs, which could lead to job cuts and slowed economic growth. Internationally, countries targeted by these tariffs are contemplating retaliatory measures. The European Union, China, and others are considering their own tariffs on U.S. goods, setting the stage for a full-blown trade war that could disrupt global supply chains and stifle economic growth worldwide. But wait, there's a twist. Some experts argue that these tariffs might backfire, harming the very industries they're intended to protect. Higher input costs for manufacturers could lead to increased prices for consumers and decreased competitiveness for U.S. products abroad. So, what's the bottom line? The world is on the edge of a trade war that could have far-reaching consequences for economies and consumers alike. As this situation unfolds, it's crucial to stay informed and understand how these developments could impact your wallet and the global economy. But hold on, folks. The plot thickens. The global response to these tariffs has been nothing short of explosive. World leaders are fuming, calling the move regrettable and totally unwarranted. China's Commerce Ministry didn't mince words, labeling the action as bullying and vowing countermeasures. The European Union isn't sitting idle either. EU Chief Ursula von der Leyen warned of dire global impacts and promised retaliatory measures. Even allies like Canada are gearing up to protect their workers through countermeasures. Now let's talk about your wallet. These tariffs are projected to hit the average American family with an additional $3,800 in annual costs. Yes, you heard that right. Lower-income households will feel the pinch even more, with disposable incomes shrinking by up to 4%. Essentials like food, clothing, electronics, and cars are all set to become more expensive. For instance, apparel costs are expected to jump by 17%, fresh produce by 4%, and vehicle prices could soar by up to $4,000 per new car. It's like a stealth tax on your everyday life. And it's not just consumers feeling the heat. Manufacturers are bracing for impact, as higher input costs threaten investment, jobs, and supply chains. The FTSE 100 suffered its biggest one-day fall since August, dropping 1.5%. Tech-heavy U.S. indices like the Nasdaq plummeted by up to 5%, erasing trillions in global market capitalization. Apple alone lost nearly $300 billion in valuation due to its dependency on Asian manufacturing. Investors are fleeing to safe haven assets, with the U.S. dollar sinking to a 6-month low amid fears of an economic downturn. It's a financial frenzy out there. So what's the bottom line? The world is teetering on the edge of a trade war that could have far-reaching consequences for economies and consumers alike. As this situation unfolds, it's crucial to stay informed and understand how these developments could impact your wallet and the global economy. But wait, there's more. The economic ripples of these tariffs are turning into tidal waves, and everyone's feeling the splash. Economists are sounding the alarm bells, warning that these tariffs could be the tipping point into a recession. The Financial Times reports that the average import duty rate is skyrocketing to 22%, the highest since 1910. This surge is expected to jack up consumer prices, choke business investments, and fan the flames of inflation. Barclays is even predicting a GDP contraction and rising unemployment by late 2025. And let's talk about your ride, your beloved car. With a 25% tariff slapped on imported vehicles and parts, brace yourself for price hikes in the thousands. Even used cars won't be spared as demand and prices are set to surge. Meanwhile, the European Union isn't just sitting back. They're gearing up with countermeasures targeting up to $26 billion of U.S. goods. EU Chief Ursula von der Leyen warns of dire consequences for millions worldwide. But here's the kicker. While the administration touts these tariffs as a path to economic strength, critics argue they could backfire big time. Are these tariffs a masterstroke for American industry? Or a misstep that could cost us all? As this high-stakes game unfolds, staying informed is your best defense. But here's the biggest question. What happens next? Is this the beginning of a full-blown trade war? Are we staring at a new global economic crisis? Or is this just the bold move America needed to regain its dominance? Experts are split. Some believe these tariffs could work in the long run by forcing foreign companies to play fair and bringing manufacturing jobs back to the U.S. Others say we're on the brink of economic disaster, with inflation skyrocketing and businesses shutting down. Let's break it all down. The immediate aftershocks, a domino effect across the economy. Right now, markets are in a free fall. Investors are panicking, and some of the biggest American companies are losing billions in value overnight. Apple, Tesla, Walmart, and Amazon are all taking massive hits. And why? Because many of these companies depend on imports to keep prices low and profits high. If they have to pay extra to bring in products from China, Europe, or elsewhere, they either have to pass those costs on to you, the consumer, or take a financial hit themselves. Let's look at some of the most affected industries. Tech electronics. Most of our gadgets come from Asia. Smartphones, laptops, gaming consoles, prices are set to skyrocket. A MacBook that costs $1,500 today? It could be over $2,000 by next year. Automobiles. Already struggling with supply chain issues, the car industry is in trouble. A Ford or Chevy will cost thousands more because so many parts come from abroad. Forget about buying a Toyota or BMW unless you're ready to pay a 25% tariff premium. Food groceries. You might think, wait, we grow our own food, right? But think again. America imports massive amounts of fresh produce, coffee, and other essentials. That avocado toast? It's about to get a lot more expensive. How will this impact you, the everyday American? Right now, the average American household is looking at an extra $3,800 per year in costs. And for lower-income families, that number could be even higher. Inflation was already a concern. But now, with tariffs driving up costs on so many essentials, it could spiral out of control. Let's talk jobs. The administration claims that tariffs will protect American jobs, but history tells a different story. In previous trade wars, thousands of businesses either laid off workers or shut down entirely because they couldn't handle the higher costs. Some American manufacturers will benefit, steel and aluminum industries, for example. But at what cost? If their raw materials become too expensive, they may not be able to compete globally. And small businesses? They're on the front lines. Local stores that rely on cheap imports? They're in serious trouble. Many will be forced to raise prices or go out of business. The global response. Are we about to enter Trade War 2.0? If you thought China would just sit back and take this, think again. China is already planning heavy retaliatory tariffs on American products, particularly agriculture. That means American farmers, who have already struggled with previous trade wars, could be in for another brutal round of economic pain. The European Union is also ready to strike back, with proposed tariffs on everything from American whiskey to Harley-Davidsons. And Canada? Even our closest neighbor isn't happy, calling these new tariffs a slap in the face and considering countermeasures of their own. This isn't just about trade, it's about politics. World leaders are now seeing the U.S. as an unpredictable force in global trade, and some countries are already looking for alternatives. That means more trade deals between China and Europe, cutting the U.S. out of critical supply chains. Could this lead to a recession? Some economists are saying yes. Here's why. Higher tariffs, just higher prices, just less consumer spending. Businesses face higher costs and layoffs, lower wages. Stock market instability, or investors pulling out, less economic growth. It's a chaotic mix that could easily lead to a downturn. Remember, the Great Depression was partly triggered by tariffs. Could history be repeating itself? So, what happens now? That's the million-dollar question. Will the U.S. hold firm? Or will there be negotiations to roll back some of these tariffs? Will other countries hit us with their own tariffs, sending us into a full-blown trade war? There's one thing we do know. This is far from over. The decisions made in the next few months will shape the future of the American economy for years to come. And you, yes, you will be feeling the impact every time you buy groceries, fill up your gas tank, or upgrade your phone. Is this the right move for America, or is it a disaster in the making? Let us know what you think.